Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, March 21, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we have what's called a follow-through day from the Fed Kabuki Theater reaction, from the dovishness, from the money printing, from the lowering interest rates, rate cuts, stop tightening the economy, stop choking the economy. That's what the market heard yesterday from the Fed. Today, she had follow through. So rather than giving it all up in one shot, follow through is bullish, it's positive. The trend is up. There's nothing technically wrong with this market other than now she's starting, even on a daily chart, to get too far from home base. Now, here's something that we discussed in the live room today. I have something called, and it's a proprietary formula that I have, it's called waning velocity. What does that mean? At times, whether it's a stock, whether it's an index, whether it's a commodity, it doesn't matter. We can measure waning velocity. So intraday, I'm not so concerned about waning velocity from the ups and downs, the normal chop shop gyrations of a market or a stock. But when I can calculate waning velocity on a weekly chart or a daily chart or a monthly chart, some kind of longer term chart, it has more meaning than a 15-minute, a half hour, an hourly chart. Certainly more meaning than that. And that's why I brought it to the attention of the live room today. We have waning velocity in the spiders. Now, it doesn't mean it's going to turn today. It doesn't mean it's going to turn tomorrow. It means it's sometime over the next couple of days. We should A, see it either peter out and go sideways, or B, have a pullback in the other direction to retrace a part of the most recent move, which is normal garden variety market activity. And under normal garden variety markets, what we'll see is the market pay a visit to the most recent breakout area. Where would that be on this chart? Well, you have a former high. The high comes in at 518.22. We can demark that off on the chart. And therefore, what we do know is that the market will be back to pay a visit, run a test of 518.22. You can take that one to the bank. It doesn't mean they won't or will get to, let's just make up a number and say 530, 528, 525. They can go up first, but they will be back to pay a visit to 518.22. Staying above will then be the bull case at that time. Getting back below will be the case for a further decline, further corrective pattern, further retracement slash take back of the Fed day. This is just part and parcel, normal garden variety stuff to way the market works all the time. Now, let's take it forward. Let's say they do go up tomorrow, float them Friday into next week. What are we expecting? Well, we're not expecting anything, but what we do know is there's a big fat round number around 5.25. Sometimes they come up short, other times they spike them through. Was today the day they come up short and turn around, or will another day be the day they get closer or over it and have some bull bear battle going on at 5.25? That's the next big time place. 525, write it down, put it on a sticky note. Let's take a little intermission for a second. Take a look at Hasbro, HAS. Why are we looking at this one? This was a swing trade out of the Automagical lazy swing trader algo system. Enter 47.39, exit 51.05, profit target number one, money in the pocket, base hit in the pocket. The rest is a risk-free, emotionless trade. You never know how high they can go. The next target, second profit target, off today, 55.50, up 12.4%. Just as a general rule, wanted to bring that to your attention. Why? Remember Tesla. Hit first profit target this morning out of the gate, popped through it, never looked back, and is down considerably, like $5-6 by the end of the day from that exit on the profit target. How do we know that was going to be the profit target? What led me to believe that we could wait another day or another 2 days from the initial rally early this week? Why was I able to do that? Automagical lazy swing trader algo system. Now, here's the point. The point is, what does the system give us? It gives us a trade alert. You get a text alert and an email. What else does it give us? It gives us a watch list, so we know what's coming. Before the alert comes, we know what we're watching. What does it give us? It gives us entries, meaning prices to enter. It gives us profit targets. It gives us stop losses. If you have to lose, you lose small and fast. We don't take big losses ever in that system. We are going to take losses. Can't win every trade. We all know that. But the losses are kept to a bare minimum. You pile up the base hits. You never know when you're going to get a double, triple, home run, whopper junior. Here's an example of a whopper junior. We're up about 24% in Antero Resources, AR. Just the point I want to bring forward about the Automagical swing trading algo system. Before we wrap up the spider chart and move on from there, what's below current price? So if you look at just this bigger picture, and you can look at an hourly chart, for example, you could see spiders drip lower into the end of the day, finishing basically at the low of day. Is that going to be a bearish thing for tomorrow? We don't know yet. It's not really bearish at new highs just because they sold off just a little bit. It was a very narrow range nonetheless throughout the entire day. But if they were to come down and fill the gap tomorrow, what happens below the gap? Below the gap, the door starts to open for the same place we looked at before, 518.22, the most recent breakout area. That was a market that made a high, got rejected, busted through. They will come back to pay a visit. You will get a bull-bear battle at that place. Very similar to the SMH that we looked at the last several days, and then we saw the rally it had yesterday. Off what? The number, the same place. We'll get to that later. So what's going on inside the numbers today? So what we're going to do is let you pause the video, read the notes, go back to the chart, and double check the work. I'll point out a few important things like, what do we have today? 8:30 a.m. Eastern Standard Time, a full hour before the opening bell rings. We're going to be interested in a short scalp with potential beginning around 523.50 up to 524.35. Okay, fair enough. So here's a 15-minute chart. Obviously, you can see the routine was they went sideways all day long. By the way, right of the vertical is today's activity, and this was just a going sideways all day long, eating time off the clock. Then they came down a little bit into the end of the day. So we had the resistance zone, took all day to come down. And remember what I said earlier in this video, and one of the first things I told traders in the live room this morning before the market opened was, we have waning velocity in the S&P, but it could take a day, a couple of days to really take hold. And look what happened today. It took all day just to trade away slightly from the resistance number. So we have the numbers, but nothing happened. And that's what I meant before. Pause the video, read the notes, go back to the chart to double check the work. We have all the stuff, but they didn't do anything. Traded in a very narrow range all day long. We did have a short trade on the board inside the numbers. It was in the notes. It was also for the live room members in real time. And the short was very simple. It was up at 523.50. If you had to let them go up to 524.50, that's fine. And then we take a 5 to 7 point scalp with potential concept. That's our base hit. 50 to 70 SPY cents or 5 to 7 ES points, S&P points. That's our version of a scalp. We're not 2-point traders. So any trader that was shorting up there got your base hit when they came down below 523 by 15 cents. There's your 6.5 points, give or take, right in that zone. Traders are accustomed to, programmed to, trained to take profit when you get the base hit. You never know which ones are going to give you the rocket ride, but also what we don't do is we don't let the remaining portion, the trailing portion that we're holding, go bad on us. So if the market goes back up to our entry, we can make a decision, let it go, or do we want to risk any of the profit we just made to see if it's just a test? That's an individual choice. These are the things we discuss and we teach and we go over all the time in the live room in real time. What about stocks on the move today? We had five. We had DRI, Apple, ACN, and Shack was off the board. Didn't get to its entry objective, but the first four did. So let's take a look at the charts real quick, see what happened. We always look at the good, the bad, and the fugly. Five below, five creeped into the number into the afternoon at slow tape. Nobody's taken this trade in the afternoon session after they just leaked and creeped into it. We want it crisp. We want it during the morning rush. We want it to come straight in there with participation, not a creeping tape. Darden Restaurants, DRI, did the deal early in the morning, came into 162.63, had a nice bounce back in the other direction for $3 or $4. The rest is history. They came back to run a test of it by the afternoon and into the end of the day. Numbers worked. Apple, numbers didn't work. The numbers were incorrect today. Apple just had a meltdown, never really had a sustainable bounce. So my numbers were incorrect. It was incorrect to play Apple on the long side today, and therefore we got to take the bullet where bullet is due. I was incorrect in Apple today. ACN was push-ish. They came into the first, second, and third number pretty much right away this morning, bounced back halfway in between the second and third, gave you a buck or two here and there if you're averaging, painting by the numbers. Then they leaked them into the end of the day. So nothing gained, nothing lost. I know we had some participants from the third number in the live room in ACN, and they take on this thing that I kind of propose in the live room saying, not all the time, but when you look at the numbers, and I have three numbers on the board, think back and try and remember how many times I'm going to be wrong 3 times in a row. And a lot of guys and gals, traders in the room will take that information and say, hey, look, I didn't buy the first, I didn't buy the second, but I see it at the third. You know what? I'm going to heed that information and say I'll buy the third number. That's not a terrible strategy. It's also minimizing some risk. Still not going to be right all the time, and we are going to get third numbers cut through. I'm just going to be flat wrong on some trades, just like Apple. It's going to happen. It just doesn't happen that often. What do we got going in Camp IWM today? Well, they have relative strength up more than the spiders on a percentage basis. And by the way, from an intraday perspective, we did nail the high today in the live room for traders that wanted a short in the IWM. The problem is they never really got rejected. They just came down a little. They provided a base hit. They provided a decent trade. You look at a 15-minute chart and you see after they came into that number, they had a decent pullback, but not a great pullback. 75 cents on a $208 stock. That's not that great. But it's a trade. It was a win. And we pile up the base hits because why? Base hits put you in the Hall of Fame. Where have you heard that one before? Here's what we can say about the IWM. It's the same thing we said last night. Get above this high. It's going to open the door for 216. That's the next major area, major target, major price above the most recent high. Therefore, no change. Had a nice day today. Follow through just like the S&P, just like across the board. That's expected. It's all the same market most of the time. That's why we look at divergences. We heed divergences because they're not commonplace each and every day, but they're more of the anomaly. So we want to look, why is there a divergence? Can we read into this? Can we use that information to our advantage? Sometimes yes, sometimes no. Not all divergences are created equal. What about the folks down at the transportation department? Buttigieg's crew. Another nice healthy up day, relative strength against the SPY, second favorite market leading indicator, a number one canary in the coal mine. Nothing bearish on this chart, above all the moving averages. The trend is your friend. We've got our box that we talk about from time to time, once or twice a week. We'll call this a bullish box. If they break out of this box, they're going to run a test or eventually get to this pivot high area over here. This is not bearish, it's bullish. It is a channel. They can go back and forth in the channel, but it is a bullish box above all the moving averages. Take it at face value. Any change in the Q, people? Absolutely not. They're around the all-time highs, above all the moving averages. Same routine, weekly chart, daily chart. It doesn't make any difference. The trend is your friend. Well, the Qs are breaking out. They really didn't have a sustained breakout today. They tried, but they crapped out. But they didn't even get back to the prior day's close. So we're not going to even read too much into that. Yeah, they finished on low of day. So did the spiders. Finished almost near low of day. That's not that big of a deal when you're at new highs. Not just yet. Maybe morph into something. We'll see. About the XLF, if there's nothing wrong with the financials, there's nothing wrong with the overall structure of the market. The financials are fine. She was up 0.8% today. Financials are in a melt-up situation. Financials, by the way, extended from the weekly chart, from the weekly period moving average, 20 period moving average, home base. They're going to have to come back down toward home base. Doesn't mean they have to get to home base, but they're going to have to either eat time off the clock and let home base get up to price or creep up to price, or they're going to have to go pull back sideways, a combination of both. They got some time off the clock to let home base converge with price a little bit. They never like to get too far from home base. By the way, just for visual purposes, the regional bank index, the KRE, doesn't look anywhere near the XLE. So as you can see, while this may be bullish here from a pullback-ish perspective for another pop higher, $56, $57, this is making lower highs. This is nowhere near the highs. The charts never lie. The numbers never lie. Remember we talked about this one before, smash mouth, the SMH, Philadelphia Semiconductor Index. How many times did we go over this? Breakup candle low, gap below, breakout area in between. They hit it basically within 4 cents, I believe. The low here is 212.82. I had 213.35. Sorry, not 4 cents, but it was pretty darn close. When you think about it and think about where they opened up today, now I know they crapped out, finished on the lows, but the high today at open was over 230 from 213 just 2 days ago, and we identified that number many days in advance. This is what we talked about before. It doesn't matter what the name on the chart is. All charts act and react the same way. Could have been an hourly chart, could have been a weekly chart, could have been a chart of the Dow Jones Industrial Average, could have been corn, orange juice, wheat, lumber, soybeans, IBM, Citrix, which no longer exists. We'll use Salesforce, Microsoft, and on and on. It doesn't make any difference. All charts act and react the same way. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.